Good morning, everyone. Good morning, everyone. It is Monday, May 5th, 2025. Happy Cinco de Mayo for everyone here. Thank you all so very much for joining us this amazing Monday morning for our Monday morning touch point. Lots to go over this morning. I'm excited to update the new listing to pending ratio, the single best leading market indicator available for the entire Austin area. Take a look at inventory, what is happening within our area, how can we help our clients, both buyers and sellers and investors, landlords, tenants, and also take a look at the economic forecast for the week. What is going on this week? How is it affecting the bond market? What's going on with rates? We have a lot to go over this Monday morning. Thank you all so very much for joining. Really do appreciate you taking the time to join us. Let's go ahead and get started, you all. Lots to go over once again. Thank you so very much for joining. We're going to start by updating that new listing to pending ratio. Very simple and yet powerful metric that we use. We take everything that is new on the market, we add everything that is back on the market, and then we simply divide it by everything that went active under contract and also pending. That's going to give us that ratio. The ratio of 1 is going to be what we call that perfect market equilibrium. 1,000 listings come on the market, 1,000 listings get absorbed by the market. Inventory neither goes up nor goes down. When the ratio is over 1, that means that we have more properties being absorbed by the market going under contract in relation to properties that are entering the market. Therefore, inventory will go down. And then when the ratio is under 1, then the inverse happens. That means that we have less properties being absorbed by the market in relation to properties that are entering the market. Therefore, over time, inventory will go up. When you've got a ratio between 0.75 and 0.85, that's going to give you that neutral market territory, because you have to take into account expireds and withdrawns, properties that get temporarily placed on the market. Between 0.75, 0.85, neutral market territory. You get to the 0.9, that's a good market, a good seller's market. When you see a ratio between that 0.6 to 0.75, that's going to give you the tangible increase in inventory. Inventory is going to start going up at a pretty tangible way. Between 0.5 and 0.6, you're going to get a substantial increase in inventory. Inventory is going to go up at an accelerated rate. Week over week, we're going to notice hundreds of properties that are going to be added to the active listing inventory. When the ratio is under 0.5, that is a cold market. That is a stalled market in relation to the listings that are entering the market. A ratio of 0.5 means that you have half of the listings that are being absorbed by the market. It's a 2-to-1 ratio. For every 2 properties entering the market, 1 property is going under contract. Just let that sink in. 2 to 1. Half of the inventory that's coming in is actually going under contract. So what happens with inventory? It explodes. It goes parabolic. That is why we are slightly obsessed with this ratio. That's why we update it as a team every Monday morning. And then I update this every single day, Monday through Friday. You can always find this under Insight and Statistics on teamprice.com. Let's go ahead and go backwards in time a little bit, because at 11:59, and we do this for the weekly and the monthly, at 11:59, the information gets locked in. The new price increase, price drop, back on the market, active under contract, it locks in at 11:59. When you come back to this resource tomorrow morning, and it'll be updated very early in the morning, all of those will be locked in. It'll never change again. But the pending data, we will keep on updating this for the next few weeks, because agents can post properties pending for the next few weeks. So we're going to go backwards in time a little bit, and we're going to update the pending data. I want to remind you that this is going to be for the 6-county area. That's going to be Travis, Williamson, Bastrop, Hayes, Caldwell, and Burnett counties. We're going to go from April 21st all the way through April 28th, we're going to take a look at pending. And this number is going to increase from 482 to 487. That's going to stick with the 0.57 ratio. That means 100 properties come in the market, either as a new listing or back on the market, more so on the new listing, in 57. 100 come in, 57 go under contract. That puts us right in between that stalled market, but really closer to that substantial increase in inventory. Once again, a 0.6 ratio to 0.5 to that 0.6 ratio, a substantial increase in inventory. You go to that 0.6 all the way to that 0.85, a tangible increase in inventory. Right now, we're inching towards that 0.6 ratio, so that really does put us not on a stalled market, nothing's happening, but right there within that substantial increase in inventory. And of course, we've got the data to prove that that's exactly what we are experiencing. We're going to take a look at the new listings, active listings, and everything else. So there's the pending. Let's go ahead and update the previous week from the 14th to the 21st. That number is going to increase just by 1 at 526. Let's go from the 7th all the way to the 14th. That's going to bring us to 543. 543. Now let's go from the 31st to the 7th. That's going to be 649. I'm going to update just a few more weeks just to make sure that we don't have any stragglers. 621. That's all good. That's going to be 588. That's perfect. I'm just going to wrap up this entire month. 608. That's perfect. And 521. Great. So we don't have to update anything going backwards. Now we can focus on this specific past week, which is going to be from April 28th all the way through May 5th. Once again, this information is going to be updated tomorrow morning to reflect all of the locked data, new listing, back on the market, price increase, price decrease, active under contract. And then, of course, the pending will keep on updating. So right now, whoa. Wow. New listings. Last week, we had 1,403 new listings enter the market. What do you all think? Up or down? Keep in mind, more listings are going to be entering the market between now at 10:08 in the morning to 11:59 p.m. tonight. But as of now, as we are updating right now, we've got Harold up. We've got Sonia up. Y'all already up. We're at 1,428 new listings entered the market in the past 7 days. And it's 10:09 in the morning. Wow. That's 200 listings a day, which means we can expect another 150 or so listings coming on the market between now and 11:59 p.m. tonight, which means this number is going to be closer to the 1,600 new listing mark in a week, in 1 week. Let's keep on going. Price increase, 233. Price decrease, 1,900. 89%, this number goes down. We knew this number was going to go down, this 89%. That happens towards the end of the month. That's where builders tend to increase pricing. They're like, oh, prices are going up. Prices are going up. And then what happens? They start lowering prices. So we knew that was going to happen. Not a big deal. Let's go to back on the market. 218 back on the market already. Interesting. 218 back on the market, 15%. That matches the past 2 weeks. Let's take a look at active under contract. We're at, oh, well, this is encouraging. This is really encouraging. 483. I'll take that. 483 active under contract, already beating the previous week at 440. Well, that's good. I mean, we've got an increase in active, but we've got an increase in active under contract. I'll take that all day long. But the big one's going to be the pending. This is where you get to guess. You get to give me 5 different options or 5 guesses. I need 5 people to guess how many pending. What are we starting the week with on pendings? We've got Harold starting us off at 250, followed by Sonia at 269, a little bit more on the bullish side of things. Seth coming in at a very bearish 222. We've got Charmaine at 285. We've got Austin at an exact 283.99. Followed by Daniel coming in right down the middle at 280. We've got our 5 guesses. Let me go ahead and just hit this pending. Okay. Y'all, I'm very encouraged. It's higher than the highest guess. I'm very encouraged. It starts with a 3. 330. Not bad. Not bad. I'll take it. I will take it. We had a little bit of a reduction in rates. We can see that rates for this week, the average, this is from Freddie Mac, our rates were really right in line with that, even though today rates went up just by 1/8 of a point, and we're going to go over that. We had some data that came out here early today that caused rates just to go up just a little bit. We had PMI coming out. We had PMI pricing come out. So rates went up by just a little bit, but we did end last week right around that 6.75. This is from Freddie Mac. This is 6.76. That's right in line. But we were at 6.83, 6.81. There's that little bit of a pullback on rates, and we're ending at 330. I'll take this. Now, we're still at a 0.49 ratio starting out the week, but this is way better than the previous week. I would say that based on this starting ratio of 0.49, we're going to end somewhere close to that 0.65 to 0.68 ratio as we continue to update this data over the next few days and over the next 2 weeks. So we're going to outperform the previous week on this new listing to pending ratio, which is a good thing. We are still within that tangible to substantial increase in inventory. It's not until we start getting to the 0.87s, 0.84s where inventory, the rate of increase in inventory starts slowing down, starts pulling back. So we're definitely within that substantial tangible increase in inventory, but I will take any gain whenever I see it. So that's really good. Now, how much of those 1428 new listings do you think it's new construction? Well, I can pull that information really right now. Well, let me do it based on year built. Let me see if I can just pull up some year built. They actually don't have year built right here. Well, let me do this. I'm gonna do this for you. I'm gonna take the number of active listings with between 0 and 7 days in the Austin area MLS. The number is going to be just slightly different, but I can give you a percentage. So we are, if I just focus on 0 to 7 active days on the market within the Unlock MLS, we are looking at, let me just pull up some numbers right here. Just give me 1 second. We've got, I'm just looking for the percentage right here. And if I focus on new construction, which means property condition is going to be new construction, to be built, under construction, we are looking at approximately, okay, so 271. So we're looking at about 275. Out of the 1,400, about 275 out of the 1,400. That's what it's going to come out to. 275 out of the 1,400. So as a percentage, what's that express? So 275 out of roughly 1,428. As a percentage, that comes out to, kind of getting my little thing here, 19.26%. So 20%. So there we go. 20% new construction. Roughly 20%, 19.26. Let's just round it up to 20%. So out of everything, the new on the market, 20% new construction, according to Unlock MLS. Very good question. That's a great question. I love that question. There we go. Let's go ahead and update let's take a look at the same week last year. So we are already up 49 listings, new listings, compared to the same exact week last year. That's already a 3.6% increase. Last week, it was a 90 listing increase at 6.9%, which means that we're going to beat that 6.9%. We're going to get another 150 listings or so. We're going to be closer to the 7.5 to 8.5% year over year increase on the number of new listings that have entered the market. On price increase, we're down 116. On price decrease, we are up 209 listings. Back on the market, we're up by 5. But take a look at the active under contract and the pending. We are down by 32.3%. Last year, the ratio was 0.75 for this week. And right now, we're starting off the week at a 0.49 ratio. It is going to improve. It's going to settle somewhere around the 0.65 to 0.68 ratio. So we're still lagging last year. 2 weeks ago, the ratio as of now stands at 0.57. That's going to increase just by a little bit, maybe around the 0.59 to 0.6. But the same week last year was a 0.79 ratio. So we have not outperformed the previous year. Gosh, we have not outperformed the previous year since when? Since February. February 10th was the last time that the ratio outperformed the ratio last year, the same week last year. From February until, okay, we've got March. We've got another one in March. Let's take a look at it. Where's March? 728. Okay, there we go. Thank you. Thank you, Sonia. There we have it. So we've got March 17th, which is really not that long ago. We outperformed the ratio slightly because we had a drop on the number of new listings, but we did outperform. So way to go. Good eye. We've got that 0.81 versus 0.78. So that was, we outperformed that specific week. Let's take a look before we convert all this to PDF. Let's take a look at the monthly data. First thing we're going to do is we're going to update the month of April. We're going to go backwards in time a little bit, see how much of it we have to update for the entire month of April. That's going to be from April 1st all the way through April 30th. Number of pending for the 6-county area. And this is going to increase to 1881. That's going to put the ratio at a 0.59. Let's take a look at March to see if we have to update March. March doesn't change. So for the month of April, we had 5,937 new listings come on the market. Just amazing. To put in perspective, April of last year, 5,363. So let's start taking a look at so far. We're only 5 days into the month of May. So let's take a look at how many new listings. We've already had 955 new listings so far this month. Price increase, we're at 154. Price decrease, we're at 1,040. 87%. That's an improvement. Last month, it was 92%. When you take the spread between anything that went price drop versus price increase, just only the price movement. That doesn't mean that 87% of the listings dropped in price. That number is closer to 50%, not 87%. 87% would be catastrophic, but it's out of everything that could have gone up in price versus down in price, which percentage went down in price? That's 87%. That's going to be the best figure since January 2025. I'll take that. Let's go to back on the market. 1, 2, 3. Back on the market. 1, 2, 3. That's going to be 13%. That matches April at 13%. That does tend to be a low number. That means that sellers are giving up concessions post-contract negotiation. The number one reason why properties come back on the market is because the buyer does the inspection. They try to negotiate additional closing costs. They want the seller to perform repairs. They want a price drop. When the market is really hot, the seller's going to say, the heck with you. I'm not going to do anything. I just have another offer. I've got a backup offer. Or I've got a lot of people interested. I had a lot of showings. And that's going to drive the back on the market up. The hotter the market, the higher the back on the market. Another reason why the back on the market, that percentage goes up in a really hot market is because buyers are submitting multiple offers on multiple properties, and they could very well get 2 or 3 properties under contract at the same time. And they're going to terminate one of those. They're going to terminate 2 of those offers, and it's going to cause back on the market. That's going to be the second reason. The third reason why is because buyers feel pressured to go under contract. They go schedule a showing, and there's a line of people wanting to see the property. They feel rushed into making a decision. They go over list price. They feel like they overpaid, and then they sleep on it. And they're like, you know what? I really don't like the house. I feel like I overpaid. Let's go ahead and terminate the contract. The hotter the market, the higher the back on the market. The cooler the market, the more inventory that buyer has to look at, the more they're able to negotiate on the front end, on the back end, the more likely they are to remain under contract. That is why the cooler the market, the more inventory, the lower the back on the market is going to be as a percentage. Let's take a look at active under contract. We've got 209. And now let's take a look at pending. Oh my goodness. Y'all, it's only the 5th of the month. But how many pendings so far this month? Let's do 5 guesses. Let's get some engagement going. How many pendings so far this month? For the month of May. Let's get 5 guesses going. Bertina starting us off at a very bearish 75. Seth coming in at a bullish 222. 2 down, 3 to go. We've got 75. We've got 222. Harold coming in at a very, very bullish 275. Bertina, it's low, but it's only 5 days in. I do not disagree with you. We've got 3 down, 2 to go. I need 2 more people. We've got Charmaine at 185, and we've got 1 to go. 1 person. Go ahead and just... We've got 7. Zoom user coming in as saying the market is just trash. It's 7. And we've got 123. Violet would win the prize. We're at 129. And that's going to start us off at a 0.31 ratio. Whoa, 0.31 ratio for the month so far. But keep in mind, we're really early into the month. I'm not concerned about the 0.31 ratio. We are really, really early in the month. That's why when you go to teamprice.com, you're not even going to see the monthly update. I will only start updating the monthly ratio. The graphs will all be updated with the monthly towards the 10th to the 15th of the month, because this number can just be artificially low, because it is not only is it the first part of the month, but we had a weekend that covered the first part of the month. And that's going to give you really low figures. You figure properties that went under contract over the weekend, they did not change the status to pending or active under contract. That means that the ratio is going to be a little bit lower. So not concerned about this. It is what it is, but we're going to keep on updating the closed. Let's take a look so far this month. 220 closed. Withdrawn, we're at already 82. That is a high number. We're only 5 days into the month, and that's already 82. And expired, of course, we've got 28. Let me go ahead and just move this screen out so I can print this as a PDF. As a matter of fact, I'll update this on some other charts that we're going to take a look at. But I want to remind you that this information is going to be updated tomorrow morning. So tomorrow morning, if you want the absolute latest and greatest information, please come back to teamprice.com, Insight and Statistics. Of course, if you're a Team Price agent, you're going to receive that as an email, and it's going to have all of the updated information. Y'all ready to take a look at some inventory data? Take a look at what inventory looks like. And while we review inventory, this is where I'm going to speak directly to the Team Price agents. And the reason why I'm saying directly to Team Price agents is because we do make this video open and available on YouTube so that anyone and everyone can watch this video. We also post it on X, on Facebook, and all that. But this is where I want to speak to the Team Price agents directly. Have you ever gone to like a listing presentation or a buyer presentation and we've got 2,000 pages worth of data and you're like, can I just get like the top 20 charts? Like what are like the top 20 charts that I just need to make sure that I go with? Has anyone ever encountered that? I know that I encountered that. It's like, oh my goodness, this is so overwhelming. I need page 14 of this report. I need page 23 of this report. I need page 45 of this report. Like, wouldn't it be nice, you all? Wouldn't it be like the perfect world if you could just click on one link and just kind of get that daily report that just has like the top 20, the top 30 reports for you to go to a listing presentation, for you to go to a buyer presentation? Wouldn't that be like amazing? Wouldn't that be like winning the lottery, the real estate stat lottery? Well, let me show you. No, it's not another chart. It's another resource. It's the same chart. I'm not creating another chart. It's just a way to organize the 2000 charts. It's another resource. I did not promise you that I would not create another resource. I promised you that I wouldn't create another chart. Now we're going to focus on ways to organize the charts, not create new ones. All right, really excited to share this with y'all. Main page of teamprice.com. When you scroll down, you're going to see a link right there called the Austin Daily Real Estate Briefing. That right there, you can access it there. You can also go to Market Update and you can access the Austin Daily Real Estate Briefing. You can go to Insight Statistics and you can access the Austin Daily Real Estate Briefing. Well, what the heck is the Austin Daily Real Estate Briefing? Well, it's exactly that every single morning as we compile all of the reports, this one report with the table of contents gives you all of the top charts that you need for a listing presentation, for a buyer presentation, for an open house. Is that you just click one link, you're one click away from just getting your daily Austin real estate briefing. And you are familiar with all of these resources because we go over this on the Monday Morning Touchpoint. We go over this. So what I've done is I've just consolidated and I picked all of the different pages from the different reports. It's okay, we need this from this percentile analysis. We need page 13 of percentile analysis. We need page 25 of market cycle. We need page 36 of X, Y, and Z. So let's go over this information. We have right now 16,320 active listings currently on the market right now. Wow, 16,320. The previous high was exactly 1 week ago at 16,095. So we increased by 225 active listings from the previous high. Now, the 2024 peak was July 15th, and that was at 15,503. So we are we're 800. We're over 800 additional listings from last year's peak. And you can see that year over year, we are up 21.8% on the number of active listings year over year. Cumulative new listings, we are up 8.8%. We're at 19,108 cumulative new listings so far from January through April. I have not added May yet because we're going to update May towards the 10th of the month to make sure that the data is all super accurate. But we are up 8.6%. What about pending? Well, I am a little bit sad to report to you that we are now back on negative territory on pending. We had a really short little cycle right here where we were outperforming last year on pending. And that only lasted like 3 days. Now, this is where we are. We are now down year over year on pending. Last year, we had 4,933 pendings. Right now, we've got 4,837. We are down 1.9% on the number of pending. Cumulative pending, we're down by 8.1%. So you see the gap? We've got cumulative new listing, we're up 8.6%. Cumulative pending, we're down by 8.1%. That gap That's what the new listing to pending ratio expresses, is the gap between the new listings and the pending listings. New listings are up 8.6%. Pendings are down 8.1%. That's why we've got a ratio that's under 1. And what does that mean? It means inventory goes up. And it also means that the activity index goes down. The activity index is going to be the pending divided by the active plus the pending. That's right now at 22.9%. This same exact time last year, same day last year, we were at 26.9%. We're at 22.9% right now. Out of all of the active listings currently in the market, all 16,320, 48.9% of those have had a price drop. Manor is now leading the entire 30-city area at a staggering 84.2%. Of all active listings currently on the market in Manor have had a price drop. 84.2% in Manor. A lot of price pressure in Manor. So let's take a look at the activity index for the top 30 cities. The number one city in the entire area is going to be the city of Buda at a 33.1% activity index, followed by Jarrow at 31.6, Kyle at 31.5. We've got Hutto at 30.7, Pflugerville, Manchac. Austin is at 19.6% activity index. The yellow line is going to be the average activity index for all 30 cities. And then the green is going to be the median. Liberty Hill and Taylor are exactly at the median. We've got Driftwood at the average. The least performing city in the area right now is going to be Spicewood at a very low 9% activity index, pending divided by active plus pending. And of course, we can see this ratio expressed as a graph. We're currently at a 0.60 ratio for the month. And of course, this right here ends for the month of April. We have not updated May just yet. We just did our update, but that would be like 0.3. We're not going to update this graph showing a 0.3. It's only 5 days into the month. It's going to communicate the market's crashing, and that's not a reality because it's only 5 days, 2 of which were over the weekend. And of course, we've got Cinco de Mayo today, so, at least 90% of us are celebrating Cinco de Mayo, so we're not going to update the MLS because it's Cinco de Mayo. So we're not going to update this until like the next 10 days or so. And you can see the new listing to pending ratio at a 0.60 for the month of April. We have to go all the way back to 2003 to get a ratio that is slightly under that. This is going to be the cumulative difference between new listings and pending. And I love this chart. This is my favorite chart. I love this chart. This is the cumulative difference. So this is what we do. The gray line are the number of new listings, cumulative new listings. So we add everything that came on the market new for January, everything for February, March, and April. We add everything up. And the dates aren't showing. I'm going to correct the dates right there. I don't know why the dates aren't showing. So that will be corrected. The dates are supposed to be showing. But you can see 2025, 24, 23. This goes all the way back to the year 2000. The cumulative new listings, that's going to be the gray. The cumulative pending is going to be the green. And right there, 2024, we split. The last time we had that split where we had more cumulative new listings in relation to cumulative pending listings was when? It was back in 2011. And then we add up the difference. What is that difference between the new and the pending? That's going to be this bar graph underneath. And we're at 4,273 for the month of, this is the last month was April, but this is cumulative, January, February, March, and April all put together. That's going to be the highest difference going all the way back to 2004. The highest difference, the cumulative new listing and pending difference, highest since 2004. Pretty amazing to look at it this way. Really amazing. Okay, we've got Bertina. I admit that I continue to remain overwhelmed with all of our information and how to best package it and utilize it. So this is awesome. Well, thank you for the feedback. I'm really excited about this. Just consolidate that. And I really want to keep the number of pages really right around that 30 or so. So if there is a page that you see yourself using over and over and over and over, send that out to me and we can always update this. And then if one of these pages you're like, I will never use this, this is just kind of ridiculous, then I'll remove it. So we really want to make this resource the absolute best of the best for you all. Cumulative sold. Where are we cumulative sold from January through April? Well, on the sold side of things, we are down 11.9%. You remember that on the pending side of things, we were down 8.1%. On the sold, we are down 11.9% because not everything that goes pending sells. That's why we've got the back on the market. We still have 13% of transactions do fall through. That is a record low. It's a very low number, one of the record lows for the month of April. And even right now for the month of May, that is a very low number. But that's why you have a gap as a percentage between the pending and the sold. Not everything that goes pending sells. Let's take a look at the year over year and what we are expecting as far as the number of new listings in relation to some of the other data points. And this right here, what I'll do is, what we're looking on this chart, it's how are we comparing year over year? And how many months into the year are we in relation to last year? That's really what we're using for this specific chart. As a year over year comparison, where are we in relation to the previous year? And we can see that we're not going to outperform next or last year. As of now, it doesn't look like we're going to outperform on the number of transactions. We're going to outperform on the number of new listings, no doubt about that. But between back on the market, active under contract, and pending, it looks like we are trailing last year when you look at all of this data. Let's take a look at months of inventory. And of course, we can see that with new listings going up by 8+% and solds going down by over double-digit negative percentage, what happens with months of inventory? We've got less selling and we've got more active. Well, of course, that is going to go up. And we can see that this day last year, we were at 4.66 months of inventory. Right now, today, we're at 5.84 months of inventory. So what are the cities with the highest inventory and then the cities with the lowest inventory? We've got a lot of cities tied for the record high. We've got Deo, Driftwood, Lago Vista, Marble Falls, Spicewood, all at 11 months of inventory, followed by Smithville at 9.48 months of inventory. And then we've got Wimberley, Burnett, and Taylor. That's right north of the buyer's market. Those three cities are now in buyer's market territory. And then the cities in a neutral market. We've got Bastrop, Manchac, San Marcos, Austin, Lakeway, Liberty Hill, Leander, Lockhart, Cedar Creek, and now Dripping Springs. Those are all in a neutral market. And then, of course, we've got the rest of the cities that are still in a buyer's market. The number one city right now is going to be the city of Hutto at only 3.4 months of inventory. But this is where we have to understand the hyper-local nature of real estate, because something really interesting is happening with Hutto. On the new construction side of things, you've got a really good seller's market. And the reason why is because builders are offering insane incentives. I saw a 30-year fixed 3.5% rate. The builders buying down the rate down to 3.5%. So the builders are offering amazing incentives on new construction. That product is going under contract. Buyers are absorbing that product. At the same time, they are pulling back on the number of properties that they are putting on the market. They slow down the pace of construction, and you can see this by the permitting data. So you've got a little bit less inventory on the new construction side of things with crazy high incentives for those buyers. So that's going to be the seller's market side of it. But the resale side of Hutto very challenging, especially if you have a listing or if a seller is competing with that new construction. Imagine a seller that bought 2-3 years ago and they're competing with a builder. The builder's offering 4% rate, 3.55, whatever the rate is. I don't care if it's 5% rate, but they're offering closing cost assistance, rate buy down. They're offering realtor commission sometimes at 5%, and it's $20,000 cheaper than what your client needs to sell to break even because they bought 2 years ago. So the resale market is in a buyer's market territory, whereas the new construction market is in a seller's market territory. So you can't just take a look at Hutto, list a resale property on the market and say, it's a seller's market. It's the number one city in the area. Let's be aggressive. Now, you've got to be hyper-local. You've got to analyze what is going on within that subdivision, that specific market. Very important for you to do that. Now, let's take a look at the inventory increase for these top 30 cities. And this is where we can see year over year and year to date, which cities experience the highest level of inventory increase, and then also the lowest level, meaning inventory actually went down year over year and year to date. On the year over year side of things, you've got Driftwood. Inventory is 168.6% higher this month compared to the same exact month last year. Marble Falls at 102.4. And then the best performing cities year over year is going to be Del Valley. Inventory is down 34.4%. Back to the new construction. Same thing that's happening within Hutto is happening within Del Valley. Really good incentives, builders pulling back on housing starts, on permitting. They're pushing that product. They're moving that product. Resale market, a lot of challenges. New construction market doing very well. On the year to date, Marble Falls, year to date, only 5 months. Inventory is up 120.7%. On Driftwood, in Driftwood, up 96.4%. And then take a look at Cedar Park, a very well-performing area. If you take a look at months of inventory, Cedar Park right now is at only 3.66 months of inventory. But when you take a look at Cedar Park, January, it was 1.93. So even though 3.66 months of inventory is a seller's market, it's doing really well. It's an 89.1% increase from January. It's a 72.6% increase from exactly a year ago. So we could very well be looking at Cedar Park 3-4 months from now, and we could see ourselves in a neutral market because the rate in which inventory is increasing in some of these cities. Something for you to be aware of. Use this resource when you're sitting down for a listing presentation, a buyer presentation, an open house, reviewing it, because we could still be in a seller's market within these zip codes and within these municipalities, and yet the rate of inventory increase is one where you could blink and all of a sudden the market changes. I want to remind you that we do have this resource available also in the months of inventory link on Insight and Statistics that covers all 75 zip codes. I'm not going to do the 75 zip code summary within this daily Austin briefing. This is meant to be a really good snapshot. Keep it at 30 pages, but you can get the detailed zip code information for all of this on Insight and Statistics. Let's take a look at sales really quick. And for the month of April, we closed out April at 2,499 sold properties. When you look at the cumulative sold properties from January to April, there's that 9.9% drop on the number of sold properties. 8,923 properties sold from January through April. When we adjust this by population, we've got 351 cumulative sold properties adjusted for 100,000 people. We want to compare apples to apples, and that's going to be the 12% drop year over year. And now let's adjust it for the number of realtors. When we adjust this based on 1,000 realtors from January through April, 478 properties sold per 1,000 realtors. And that's going to be a 6.5% drop compared to last year's 511. We are outperforming 2023, and that's a very good thing. But this 478 is going to be the third worst on record. I'm just grateful it's not the worst on record. We did have 430 back in 2009. We're at 478 right now, sold per 1,000 realtors. Let's talk about pricing. These are the final figures for pricing for the month of April. We're not going to update the May figures until the 10th to the 15th of May to make sure that we've got solid information. But we did go negative on the year over year on the average sold price. We also went negative year over year on the median sold price. You can see the number of sold properties year over year down 16.7%, down 501 compared to the same month last year. On the month over month average, we are up 2.9%. That's going to be 16,592. On the median side of things, we are up 13,900. And there you can see that we've been flat for 3 years in a row on the average sold price. We've had very similar Aprils on record going all the way back to 2022, where it went really high. But for the past 3 years, it's been flat. The market, when you look at the month of April, the market's been pretty flat over the past 3 years on the average sold price. We are down 12.71% on the average sold price. We're at $595,275. Of course, you know that the market peaked back in May of 2022 at $681,939. That's going to be a drop of $87,000. On the median side of things, that's a little bit of a different story because we are seeing the price go down on the median side of things. So here we've got April, 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 April. All these little blue dots are going to be the month of April, and the average is flat, but the median is actually down year over year. The market peaked at $550,000 back May 2022, and we are down exactly $100,000 from the market peak. So when you compare April of 2025 to 36 months prior, we are down, there's that 18.2%. That's going to mark the largest 36-month decrease on record. The previous largest one was back in 2020 or 2004 at 5.3% negative, and then 2011 at 2.93% negative. This line is going to reverse itself and start going up. That's my prediction. But you can see that over a 36-month period, we were up 74%. So what goes up must go down, and that's certainly what we are experiencing. So if today is the bottom of the market, the absolute bottom of the market, and prices do not go down from this day forward, then we can expect a return to peak by July of 2029. And that is using the 25-year compound appreciation of 4.98%. We would return to peak value. We would cross that peak value in the next 52 months. It would take that long if you simply apply the 25-year compound appreciation. So how are things for the year? When we take a look at everything that has sold so far this year, the average sold price for the entire year is $566,564. That's going to go negative. That's a drop of 0.2% year over year. The median sold price so far this year is $430,090. That's going to be a drop of 2.4%. And that's going to mark the third year of price drops, both on the average and on the median. The sold to list price ratio holding steady right at that 7.3%, exactly the same as last year. But I want to remind you that this is a sold to list price ratio based on the final list price, not the original list price. If you're looking for the sold to list price ratio from the original list price, go to Inside Statistics, go to sold to list price ratio, and it's going to break down not only the sold to list price ratio from the final list price, but also the original list price, and it's going to give you the difference. We've got a few more charts to take a look at before we look at the economic calendar and take a look at the bond market. This is also one of my favorite charts. This right here communicates the bifurcated nature of the Austin market, where we take the bottom 25th percentile, the top 25th percentile, and then we look at the difference between what's sold a year ago and what's sold right now. And we can see something really interesting, that the top 25th percentile is now negative on the price per foot. And that went down to a positive 1.1% on the actual price. Now, when you look at the bottom 25th percentile, we are down 3.7%. So once again, I want to remind you, very, very simple to look at this. This might look really complicated, but let me really break this down. This right here is super important. We are down on the number of sales 25% year over year. We take a 30-day snapshot right now. We do today going back 30 days. We do the same exact time frame exactly a year ago. And we take a look at the 25th percentile, the 25% more expensive, the 25% least expensive. That's what we do. We take a look at what was the price, meaning 25% of the properties a year ago sold for $345,000 and less. This year, that number dropped to $332,000, $332,264. Then we take a look at the price per foot. That's going to give us the how is the bottom 25th percentile compared to the top 25th percentile. The reason this is important is because it does answer that question. How can all the leading indicators show us that demand is down, inventory is up, new listing to pending ratio is down, activity index is down, and yet prices are going up? Well, that's because the top 25th percentile was going up in price. Now, if you review some of our previous recordings from 2 weeks ago, 3 weeks ago, 4 weeks ago, you heard me say that is not going to last. That is temporary. As soon as the selling season is over, this number is going to go negative, and then prices are going to go down. You heard me say that. It's recorded. Go and review it. We now noticed that price per foot going down, which means in the next few weeks, this price is going to go down because the number of municipalities is actually, and this is the number of cities, out of 30 cities, 13 are still up. That number is going down. It used to be 17, now it's 13. Overall, this number, when this number goes negative, prices will follow. And that's what we're noticing. So be on the lookout for that. Use this information just to educate your clients on why is it that prices are going up. And this is a really good leading indicator. Once we start seeing these numbers right here start going down and go negative, we know that prices are going to follow. And that is something that we just now noticed. There's the resource to show you. A few more things. We're going to take a look at the appreciation. So far this year, 10 out of the top 30 cities have actually appreciated in value year over year when we look at the median sold price. The number one performing city right now is going to be Driftwood, where year over year, a staggering 21.1% increase in the median sold price year over year. That's just amazing. 2024, the median sold price for all of 2024 was $950,000. Right now, it's $1.15 million. The least performing city is going to be Burnett at number 30 out of 30 at a drop of 20.8%. And you can see all of the top 30 cities right there. And then the last thing that we're going to review on this daily briefing is going to be this resource called the Inventory Stress Index. And very simple index, it's 0 means there's a lot of inventory putting stress on the market, and it's going to favor buyer. Anything under 10% favors buyers. Anything over 50% is going to favor sellers. And then you've got the in between. The closer you get to 10%, the more it's going to favor buyers. The more you get to 50%, the more it's going to favor sellers. 100% means it cannot get any hotter than that. We actually got to 100.9%, and that's almost statistically impossible. That's the hottest it's ever going to get. It's never going to get any hotter than that. That's just anything you put on the market's going to sell. There is no inventory. There's sky high demand, and it favors the sellers. Sellers can ask whatever they want for a property. They're going to get it. And that was March of 2021. That is why back in January of 2022, we were able to say, hey, things are cooling down, even though the sold data didn't peak until May of 2022. This is a very powerful leading market indicator. What is the available inventory in relation to the demand stress like in the market? We are at 5.1% for the month of April. Less than March, less than February, way less, half compared to April of last year. And that's the amount of inventory in relation to what's going under contract. With this 5.1, which matches the fourth quarter, that will 100% tell us that we are going to have pressure on pricing over the next 2 quarters. That is a guarantee. That is a fact. This information does not lie. So we know for a fact that prices are going to go down over the next 6 months to 9 months, over the next 2 to 3 quarters, because this inventory stress level is so low. The rate of increase on inventory, along with the rate of decrease on properties going under contract, will provide more stress on the market, and it's going to favor buyers. So that's a really good resource for you to take a look at. You can go to Market Performance on Insight and Statistics, and you can read more about it. We've got 23 reports that analyze the market under Market Performance. It's available on Insight and Statistics. So that right there, my friends, is your Austin Daily Real Estate Briefing. Take a look at this resource, updated on a daily basis, and it is available both on the main page of teamprice.com. You scroll down, you click on Austin Daily Briefing. It's under Market Update, Austin Daily Briefing. It's under Insight and Statistics, Austin Daily Briefing. And then, of course, when you go to Insight and Statistics, you can go at it. You can look at over 2,000 pages of individual reports, analyze zip codes, do everything at a kind of micro level. But I do want to create, and we now have it organized, one report that gives you the snapshot. You can take it to listing presentations, buyer presentations, open house, or really for your own personal education. Click on that daily briefing, take a look at exactly what's happening. All this information is updated at the latest by 7 a.m. in the morning. So really excited just to show you this information. Let's take a look at the economic calendar. And this is going to be a fairly important week because on Wednesday, we have the FOMC, the Federal Open Market Committee. They're going to be making their interest rate decision. No one is expecting that they're going to lower rates. No one's expecting that they're going to increase rates. We're all expecting that it's going to stay exactly the same at 4.5%. Now, the bond market today is up, and we are losing some ground within the bond market. It is up 2.8 basis points. You can see that right there on the screen behind me. And let's see how this is affecting rates. This is going to be your weekly rate update from the amazing Robert. We did go up 1/8 of a percentage point right now for the 30-year fixed conventional. We're at 6.875. 15-year at 6.5, FHA, VA, USDA, all at 6.25, jumbo at 6.75, which is a really fantastic rate for jumbo. You figure the jumbo 30-year is actually lower than the conventional 30-year, which is amazing. And then a very attractive investor rate at 7 1/8, 7.125. And there is our new listing to pending ratio, our inventory update, our rate update, and our entire Monday morning touch point to get you started with the week so that you can equip your clients, be equipped, and whatnot.